To crude oil now. We've seen crude futures come off their best levels of the day ahead of this morning's inventory report. That'll be out at 10:30 Eastern, expected to show stockpiles declining again. Meanwhile, our next guest is skeptical about oil gaining as we head into 2010. Neal Dingmann is a Senior Vice President of Equity Research at Wunderlich Securities. He joins us this morning from Houston. Neal, first off, let's get your target price for oil. Where do you see the commodity trading as we go through the first few quarters?
Sure. Good morning, John. We definitely see a bit range-bound with a bias upwards. As we sit near $80 today, probably see it exit next year. I would call it only maybe $10 or $15, but it is scary the number of things that are out there that could cause this price to spike. So sort of those things normalized, we're calling for kind of a range-bound in activity, but there sure is a lot of things out there that could really push this thing up.
Let's talk about one of those factors that certainly drives the price of crude, the demand story. We're waiting for inventories data later today. What's your view on the demand story and how that affects the price of crude?
Sure. I mean, right now you got to continue to focus on the macro, not only here in the States where GDP, we're looking for next year around that 2% handle, but maybe even more in particular, more important for oil would be for China. You're looking over there and they're calling for somewhere around 10%. That alone, we believe, has the power to take oil, if it doesn't come in, bring it down as low as 60, and if it comes in at that 10% plus, could push it to 90 or close to that $100 very soon. Okay,
that's the demand story. What about the supply story?
Supply, the two things that I keep eyeing very close. Number one, and I think most important, is really the compliance with OPEC. And most recently, we've only seen that around 60%, and I think the wild card there is Iran. And, again, how much they're going to sort of contend under that quota. And that, to me, is definitely the biggest movement out there on the supply side. The other to keep your eye on, obviously, would be Iraq, given it has the potential to produce, anywhere from 1 to maybe upwards to 7 to 10 million barrels a day. So that's sure a wild card also on the supply side.
Anyone who was a buyer of oil at the start of the year would have seen a better return this year than, say, just buying an average S&P index or ETF, crude up more than 75%. A lot of people talk about the speculative interest in crude. We know that based on some of the data from the CFTC, it's not as high as it was earlier in the year, but how does the speculator play into the crude story?
Sure. No, I think it is. It's still an important story, as you mentioned. And to me, what I think now you're seeing is they maybe don't drive the direction, but they sure accentuate the direction that it's going. Various days that we've seen, even in the last couple of weeks, where maybe in prior instances you would have seen maybe oil up or down, maybe 2 or 3%. Instead, you're seeing it up or down closer to 4 to 5%, which I believe is, when these speculators come in on top of that price already moving.
Neal, we've got about 20 seconds left, but obviously for oil stock investors, you've got to be factoring that in. I know you look at names like Lufkin in the oil field pumping unit space. Now, that's a stock that has run up more than 100% this year. So how does it get affected by the outlook for crude?
I think it continues to do very well. Both international expansion that you're going to see from this company that does artificial lift, plus just this positive domestic oil market driven by areas like the Bakken and the Permian Basin, I think continue to make this stock hit new records.
All right, Neal, thanks for joining us early on this
Thanks, John.
Wednesday morning.